Problem 1, exercise 9.3 in your text. This is part B. In part A, we did a horizontal analysis where we compared this year to last year and looked at the change from year to year. Now we're going to do a different analysis, vertical analysis, where we're going to, instead of going from year to year, like we did in horizontal analysis, now we're going to compare everything to sales. So we're going to answer the questions: what percentage of sales was our cost of goods sold? What percentage of selling expenses was our sales? What percent of our admin expenses was our sales? So we're going to take these same numbers, but instead of dividing and doing calculations year to year, we're going to be doing all the calculations within the statement. So we're going to take cost of goods sold. Sales for 2019 were $240,000. So that was clearly 100% of sales. And we're going to say, okay, our cost of goods sold was $180,000. So 180,000 divided by 240,000, because that's what we're doing. We're taking this and dividing by sales. We're dividing everything by sales. So 180,000 divided by 240,000. Our cost of goods sold was 180,000. That's equal to 75% of our sales. Our selling expense for 2019 was $26,000. That's 10.8% of our sales. I'm just taking 26,000 and dividing it by 240. Our administrative expenses were $12,000. Divide that by sales, 240,000. We come up with 5%. Okay. We'll continue on down. Our interest expense divided by sales, divided by sales, divided by sales, divided by sales, divided by sales. You're getting tired of hearing me say divided by sales? Starting to feel like Popeye. Everything has to do with sales and sailing. Anyhow, interest expense. You guys even know who Popeye was? $7,500. Divide by sales, 240,000. We come up with 3.1%. 3.1% of our sales covered our interest expense. Our total expenses, $225,000. Now, I know that there are some of you who like to be precise. So that's 93.5483333. I'm going to be lackadaisical and round it off to 94%. But if you want to put down 93.5483333 ad nauseum, knock yourself out. Income before taxes, it's $14,500. That's 6% of sales. So 6% of sales went to pay for income, was our income before taxes. Our income taxes were $1,200. That's not 5%, that's a 0.5% of sales. And our net income, $13,300. divided by 240,000 is 5.5%. Now, here's where you have some management numbers and you have some things you can talk about. First of all, the one thing you're going to want to do is you're going to want to look at your competitors in the same business and see what their number is for that. You can use that for benchmarking because all of these numbers are available from their financial statements. Their income statement has all of these numbers. You can do these computations. And you may be asked to compare your firm, your entity, your department with either last year or another department or a similar industry. Now we're going to do the same thing for 2018. And I'm going to use purple ink to make sure you can see the difference. Last year we had $200,000 in sales. And that was 100% of sales. Last year, our cost of goods sold was $124,000. You see where I'm getting these numbers from? $124,000. That was 62% of sales. Our selling expenses last year were $20,000. That was 10% of sales. Our admin expenses last year were $18,000. Divided by 200,000. It's 9% of sales. Not 90, 9. We're going to continue on down. We're now at interest expense. Our interest expense last year was $8,000. Divide interest expense, 8,000 by 200,000. We come up with 4%. Our total expenses last year were $170,000. Divide that by 200,000. And our total expenses this year are 85% of sales. You see where there's some numbers here that you're going to want to talk to your staff about. Last year our income before tax was $30,000. That's 15% of sales. As I'm looking at these numbers year to year, I'm getting the feeling that you're on the Titanic and ain't many of us look like Kate Winslet or Leonardo DiCaprio or whatever the hell his name is. Income taxes last year were $3,000. It's 1.5%. Again, that number doesn't tell us much, but this number does. Our net income last year was $27,000, and when you divide that by 200,000, 13.5%. So you're going to want to call your staff together and have what is lovingly known as a come to Jesus moment. You're going to say, folks, last year our administrative expenses were 9%. This year they're 5%. That's the good news. And that's all the good news there is. Because everything else is bad news. Our income before taxes this year is 6%. Last year it was 15%. Why? Last year our income, our net income, was 13.5%. This year it's 5.5%. Why? So doing this analysis gives you the opportunity to better manage your business using accounting data and not gut feelings, to ask your staff why these changes occurred, and you can show them that they did indeed occur. In business, it's often pretty easy to lose sight of the big picture because you're busy with the day-to-day operations. Periodic analysis of the financial statements gives you good management data.